Hello guys, so you're probably wondering what is the generally accepted sales process for your accounting from sales order, sales invoicing to collections. So for today, I'm going to be discussing the general sales process. Coming up. Welcome to the Digital Transformation Academy. My name is Dennis Hilario and I'm here to help you in your digital transformation journey. Let the show begin. Welcome to the Digital Transformation Academy podcast. Today is December 2, 2020, the last month of the year. And let's all stay positive towards the end of the year to welcome 2021 right. So my creative juice is super pumped these days. And I'd like to share with you some topics later on. Well, outside accounting processes, but related to digital transformation, such as my interest with Airtable. I'd like to share some thoughts about creating your own bookkeeping or accounting system using the Airtable. And also, I'd like to share my passion now in taking care of my new puppies. Two of them. One is a golden retriever named Tommy and a black Labrador named Lucy. But again, I'm gonna be discussing that in my next coming episodes. But if you're new here, my name is Dennis Hilario and I post new episodes every Mondays, Wednesdays, and Fridays. So make sure to hit the subscribe button and smash the like button in whatever platform you are consuming this video podcast. And by the way, if you're interested with a premium or complete ERP software outside an accounting software or on top of accounting software, then you'll probably be interested with my Snap ERP demo. Just go to oneboxcloud.com/ERP demo to sign up and watch the demo instantly. So let's now proceed with the main topic about the sales processes. The sales process that I would like to discuss right now is after booking a sales from your customer. So this is where when the customer issues a purchase order to you or calls you to say that they want to order something from you. So generally in a trading business, let's talk about trading business first. If the customer issues a purchase order, then you internally prepare a sales order form that indicates the order. This is to document, basically to replicate the purchase order from the customer. So you record who's the customer, what is the date of the order, when is the delivery date, and the items that they have ordered. So that includes the prices, discounts if applicable. So it's just an internal document recording that particular sales, but there's no effect in your financial statements yet or your receivables yet until such time you issue or deliver your goods or your services. Again, we're talking about a trading business who delivers goods. So normally you prepare a delivery receipt in delivering those goods. Some companies attach a sales invoice already together with the delivery receipt. But some others, they issue delivery receipt first before the sales invoice because some of them, they deliver partially until such time you complete the delivery. That's the time you issue a sales invoice. And by the way, the delivery receipt and sales invoices are official documents, meaning these are the ones you applied for an ATP, an authority to print from the BIR so that you can issue an official sales invoice. In accounting, once you issue a delivery receipt, there should be a deduction from your inventory and also a recognition of a cost of goods sold. And then if you issue a sales invoice, that will now declare or set up your accounts receivable to your customers and then recognize your revenue or your sales if you are a goods company. If you are VAT registered, then you put also the VAT payable or output VAT entry. It's a liability that you set up once you issue an invoice So basically, again, you issue a delivery receipt, you issue a sales invoice, and then, of course, together with the goods that you have delivered. So don't issue an invoice yet until such time you deliver the goods. But some business processes, the customer pays a down payment first. That's a little bit tricky. Well, we can discuss that later on, but the normal process is delivery receipt, sales invoice, and then after that, once the customer pays you, then you issue an official receipt. Okay, so now the official receipt will book your cash and then deduct from your receivables. So the books or subsidiary ledgers that are affected is one is of course the accounts receivables. So you book your sales as well. So you should have like a spreadsheet of your sales, which is the history of your sales. And then you also have an update of your cash book, which is increase in your cash since you have collected money from your customers once you issue sales receipt or official receipt. And then after that, you also deduct from your receivables. So you also update your receivable ledger. So that's basically the process of sales of a typical trading business, a wholesale, or can be a retail company as well, right? But if you are a service company, instead of a sales order, you issue like an agreement, a service agreement that indicates the services that are required by the customer. And then after that, once you have fulfilled the service, then you issue a billing statement. So the billing statement will again set up your receivables, but not necessarily your sales, because in service companies, as per BIR mandated process, it should have been after collection. So again, you just defer the revenue side and also the VAT side, and then once the customer pays you, you now issue an official receipt. Okay, so an official receipt now again deducts from your receivables and increase the balance of your cash. And by the way, let me correct my statement earlier. For goods company, instead of official receipt, it has to be collection receipt. Because in sales invoices, that's the document where the VAT should be accounted. Then the collection receipt has no VAT. As opposed to service companies, the billing statement is not an official document that declares the VAT. It is the official receipt that declares the VAT or the VAT if you are a VAT registered company. So those are the differences between goods and services. But for some industries like retail, they have normally a point of sale where you record your transactions there. So since it's a fast-moving business, then every time you punch an order, there should be a sales invoice and together with the cash. So it's a different thing. There's no receivable. Well, most of them has no receivable since it's a cash transaction. But it basically affects your cash balance. Again, increase in balance, and right away recognize your revenue and your VAT liability. So that's for some retail companies. Some others like hospitality or hotels, of course, they have a hotel management system. So they just key in all transactions while the customer is there. And then once they check out, that's the time they recognize the booking of your sales or your cash. But some others, they book it on a per day basis. They book the sales on a per day basis every time they do a night audit. So that's for hotels. Some other companies like, of course, e-commerce. If you have an e-commerce site, every time they do a transaction, there should be, again, a real-time booking of your revenue and your cash as well. So that is it for today's episode, the general accounting process for your sales up to collection. So I hope I provided a value in this episode. So now, if you guys have questions, feel free to comment in the below section. And again, this episode is brought to you by my Accounting Starter digital course. It's a 6-module course which teaches you from basic definition of accounting terms up to computerization and accounting software called computerization. So it comes with a 6-month free access to our Snap Accounting. It's a light version accounting as a starter for you to adopt digital transformation, which is computerization of your accounting process. So again, accountingcourseph.com. And also, if you haven't listened to my previous episode, is the part 1 of the general accounting process. So make sure to, or I highly recommend to go back and watch that part 1 and just jump back here in the next episode this coming Friday. So that is it for today, and this coming Friday I would be discussing some more accounting processes, maybe a little touch about production or manufacturing. So thank you so much for watching or listening. DX Your Life in Business. Have a great day.